This is your San Diego September real estate update. Are you curious how likely a recession is in 2020? It's the question of the hour. It's on everyone's mind. Hi everyone, Travis McClain, McClain Real Estate Group. We need to remember that next year is a presidential election year and probably one of the most controversial elections yet. There's going to be a lot of questioning and political debates about the economy. Why is it so good? And questioning if our economy is going to decline. So this can stir up a lot of hype. There have been 4 major surveys this year asking experts if they believe we're going to see a recession. 67% do believe that we see a recession by 2020. Pulseonomics surveyed analysts and 59% believe that we will see a recession by 2020. Why do we think that is? We've been on the longest recovery in American history, so we should expect to see a slowdown. The GDP will slow down, but let's look at the definition of a recession. A recession is a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a drop in GDP, gross domestic product, in 2 successive quarters. We also need to remember that recession does not mean housing crisis. In the last 3 of 5 recessions, housing prices actually increased during the recession. Obviously, 2008 was the most dramatic. Now, on the same survey, the Pulseonomics, that asked if they anticipated a recession, they also asked the same day at the same time what would trigger the recession. Number 1 was trade policy. Number 2 was the stock market conditions, and number 3 was geological crisis. Number 9 on the list was a housing slowdown. In 2008, the largest decline in appreciation was because of a housing slowdown, and the situation in the mortgage industry, of course. This year, we're not even top 8. Also, in the same survey, they asked what about median appreciation of housing? All the analysts said that housing prices are going to go up, not down. Appreciation is going to slow down, but the prices are going to be up everywhere, from about 2.5% to 4% through 2023. Why is this important to know? We don't want to get in a panic about buying and selling and be afraid that it's going to be like 2008. In fact, Morgan Housel, a renowned financial analyst, said, "An interesting thing is that the widespread assumption that the next recession will be as bad as 2008, natural to think that way, but statistically highly unlikely, could be over before you even realized it began." Prices and appreciation are expected to continue to go up, but at normal rates. Don't let all the hype about a recession scare you from the dream and benefits of homeownership. In my opinion, it's one of the best investments you can make. According to Mark Fleming, First American's chief economist, he says, if the 30-year fixed-rate mortgage declines even a fraction more, consumer house buying power would reach its highest level in almost 20 years. So what does that tell us? It tells us don't be caught up with all the hype, make the move, and as always, if you have any questions at all, please feel free to reach out to us, Travis McClain, McClain Real Estate Group. Thanks so much for watching and have a great day.